And welcome to ETF, your go-to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani, joined today by Steve Grasso of Stuart, Frankel, Andrew McOrmond of WallachBeth. Market's getting a bit of a bounce today following positive headlines on the trade front, but so far, August is still living up to its reputation as a lousy month. Stocks are stuck in no man's land. The S&P 500 ETF is down over 5%, though it's still up 13-14% for the year as investors try to gauge when and if a full trade resolution will come. What's the best way to play all this confusion? Let's take a look. Let's talk to our guest today. So much volatility. What's the best way to use ETFs to stay invested? Let's get to our guests here and talk to our special guests. What's going on here? Of course, we've got Steve Grasso from Stuart Frankel here, and Andrew, of course, with WallachBeth as well. I think the question here, guys, is we have seen two different President Trumps show up.
Right.
Friday, an angry President Trump. Right. Today, a very reasonable, statesman-like President Trump. But we still don't have any resolution to the ultimate question, which is, do we have the ingredients for a trade deal? Is this the right moment to make a trade deal? Knowing all this confusion, how do you play this right now?
So, I've used the analogy of NASCAR. And the rule of thumb with NASCAR, if you hear any driver talk about it, has been you go straight towards the smoke, you go straight towards the accident. And that's what you have to invest in, unfortunately, in this market time. So it's always been that way. It's sort of more concentrated with the tweet storms that we've seen. But when you have to invest straight through whatever the source of the hot headlines are right now. And if you would have done that on Friday, or if you would have done that any number of times, you'd be in better shape. You can't get sucked into the market sells off 10%, 5%, and then rallies back a month later, and you're left out in the cold. You have to invest through the storm.
And Andrew, you have kept insisting all through all this, with all the volatility, lower volatility is a place to play. You've been playing that SPHB, which is the low volatility ETF. The problem I have with it is you're dealing with a lot of utilities, essentially, there, and a bunch of consumer staple stocks. But it's true that has outperformed the higher beta technology stocks.
Well, like Steve said, I just think the Trump thing is brand new to all of us. There's no back testing these tweets. But August is back testable, and August is so low vol. There's so many people away. There's so low volume in the market.
Yes.
But the market makers act the same, and the tweets are something we haven't seen before. So these moves, in my mind, are exaggerated by anywhere between 100 and 300 bips a day, the days that they happen. And in a couple weeks, like Steve said, stay straight through it. If you have to be in stocks, that's why I like the SPLV. It's lower vol names. They just talked about it in the last segment a second ago that said, hey, this is outperforming during this month. And that's because the down days aren't nearly as bad. So you stay invested, stay the course. You can buy on dips. What I wouldn't do is sell on dips in the fear.
Yes, so SPLV is the low volatility. SPHB is the high beta stocks. Steve, I guess the problem I've had is this whole safety trade we keep talking about is a bit overextended. I mean, how many days are we going to talk about utilities hitting new highs? It's been weeks now. So utilities have outperformed this year. REITs have outperformed this year, another defensive sector. Consumer staples have outperformed. They're all at historic highs, these sectors, and they're trading at very high multiples historically. Is this a safe play for us to keep buying this?
So safe to the extent that anything that you're putting money in has the ability to lose value. But when you look at things that are outperforming or on a relative strength index are overbought, things that are overbought usually become more overbought, and things that are oversold usually become more oversold. So you have that potential for this to work, and the environment that created the buying of REITs and utilities and staples is not going away.
I guess the problem I have, Andrew, with this is if you look at these sectors, they're so small. I mean, what REITs are 3% of the S&P. Utilities are 3%. Even consumer staples are 7%. All right, that's better, but it's still pretty small. Tech is 22%. So you get a whole bunch of people buying into these utilities. All of a sudden, they're more than 20 times forward earnings. You're way,
it gets
way
rebalanced if you don't rebalance. But what I like about the real estate is that we're in a historically low rate environment. And whether we go, we're not going to go up. I think it's safe to say rates aren't going to go up. But where they stay the same or go down, that's going to help housing and help mortgage applications. I think that kind of churns on and can see through some of this volatility regardless, especially in a U.S.-based market, which is outperforming the world right now for the most part.
And of course, the deep cyclical ETFs, your industrials, your energy stocks, bank stocks, they're all notably underperforming the S&P 500. So the normal play would be, say, if you think there's any resolution of the trade war, those are the ones to go back into, and yet nobody answers the question. is now the time to resolve the trade issues. I don't even know if the principal participants know the answer. That's what I keep
it's
getting
unknowable.
pushed back
I don't
on me.
think
Like, Bob, you tell me.
My opinion
I don't
it's not
know.
over yet. I mean,
Right.
it's just I can't base one tweet from Trump to say now it's all good. They need to both say it's all good. And we haven't had
But
that yet.
we are getting to that point where we're building up a layer of callous to all these tweets. Notwithstanding last week's reaction that we saw.
I think you're right about that. If you look today, this is it's a rally, but it's a very tentative rally. It doesn't feel
Saturday night, Bob,
trajectory doesn't feel like blah blah boom.
Saturday night when he says the national emergency, I was getting calls from clients like, "Hey, what are we looking at Monday?" I'm like, "Just let it play out."
Right.
Try being on TV all day.